In the food business, every month we prepare the profit and loss account. And many a time that restaurateurs they find that we could achieve the projected sales, but even then our profit percentage, the expected profit percentage, we could not achieve. So in this video, I would like to share that why we cannot achieve the projected profit percentage, who is the villain, and what to do to control our villain who is eating away our profit. Hi, I am Anutosh Bhakta, restaurant profitability coach. Now, let us see that why this is happening with many of the restaurateur, and they are really wondered that who is the villain and why it is happening even after giving so much of efforts and even after achieving the projected sales. Now the main villain for this is the food cost. So please try to understand that profit and loss account, in simple word, it means kitna aya kitna gaya. Okay, kitna aya means your revenue, right? And kitna gaya means your expenditure. Now your expenditure in terms of a rent, in terms of a salary, in terms of a electricity, it is a same, right? So it is not fluctuating. So that means there is something which is fluctuating, and because of that fluctuation, our net profit is low, right? Now, what is fluctuating? It is nothing but a food cost, nothing but a food cost. Though we have already developed our average food cost percentage, because we have developed the standard recipe, we have calculated the dish cost, and we have calculated the food cost, and we have decided that what will be our average food cost. Say for example, our average food cost which has been calculated, it is 40%, right? But that is the ideal food cost, that is the ideal food cost, that not necessarily that is your actual food cost. And that is the reason we need to keep a track, okay, very close eyes on the food cost. And that is the reason we need to prepare the food cost report on a regular basis. Now what I mean by a regular basis, now it depends on the volume of your business, the volume of your revenue, the size of your business, right? Now, if your size of the business is a large, then ideally you should calculate your food cost report daily. If it is a medium size, you should calculate in a weekly basis. But if your restaurant is a very small restaurant, you can do it even monthly, right? Why it is so, I will explain little later. Now let us see that how you should calculate the food cost report. So let me share my screen with you. Now this is a food cost report which you need to prepare either daily or weekly or monthly, right? So depending on the size of your restaurant, right? Now how you should calculate the food cost or food cost report, how we should prepare the food cost report. So there are few elements are here. So let us understand what are the elements. Now what you will have to do, if you prepare, say for example, you are preparing the food cost report weekly, okay, it is a medium size restaurant, medium size business. So you calculate what was your opening stock at the beginning of the week. Say for example, if your opening stock is 10,000 rupees. Now when I say the opening stock, it is not that your a rice or a pulses or a chicken or a mutton. This has to be converted in terms of money, in terms of value. That means suppose, say for example, suppose opening stock of your chicken is 10 kgs and you have purchased chicken for 200 rupees per kg. So that means your opening stock will be 20,000 rupees. So it is in terms of money, okay, not in terms of quantity. So you calculate your opening stock at the beginning of your week, right? Because we are here, I'm giving the example of weekly food cost report. Say for example, it is 10,000 rupees. Then find it out during the week how much purchase you have done, again in terms of money, okay, not in terms of quantity. So suppose you have purchased 15,000 rupees worth of ingredients, right? So, and at the end of the week, that means in the night before closing your restaurant, or you calculate your closing stock and convert them into money, into amount. Suppose your closing stock is 5,000 rupees, right? So what will be your consumption? That is your total food cost for the week. It will be 10,000 plus 15,000, 25,000 minus 5,000, that is your closing stock, that is 20,000, right? So 20,000 rupees is your consumption, that is your food cost for the week. So how we are going to calculate your food cost percentage? So food cost percentage formula is the food cost, that is your amount, divided by your sales for the week into 100. So here the example is your total food cost is 20,000, and if your sales for the week is 48,000 into 100, so equal to 41.66%. So the variance is 1.66%. Now, why the variance is 1.66%? Because we have calculated that our average food cost percentage is 40%. That should be our ideal food cost. But actually, our food cost is 1.66%, right? So this will happen to each and every food business. You cannot have the ideal food cost and the actual food cost will never match because of the so many reasons, right? Now, what are the probable reasons? The probable reasons could be the wastage of your food because you could not store it properly. Probably you have received the low quality ingredients, right? So that is the reason your yield is less, and there could be a pilferage, right? But the industry standard for all these things, this will happen, this you cannot stop completely, but industry standard of variance is 2%, is 2%, right? Not more than that. So if it is within that, then it is fine, we are in a right track. But if it is more than that, then something is wrong. So you will have to look into your receiving, the quality of raw materials. You have to look out your storage procedures. You'll have to find it out whether you are maintaining the FIFO or not, first in, first out or not, and you'll have to keep track on your pilferage and the other wastage, right? So if it is beyond 2%, right? But you see, in case of a the large business, okay, where the sales volume is very high, there the percentage means when you calculate the percentage, that is the variance, okay, the amount will vary. Amount will vary. Say for example, if your total sales percentage, always we calculate on sales. Suppose if your total sales, okay, is 50,000 rupees, 50,000 rupees, so 2,000 of 50,000 is how much? Is 1,000 rupees, right? So that means this 1,000 rupees probably you can absorb, this shock you can absorb. But when your restaurant is a large restaurant where sales is 5 lakhs rupees or 50 lakhs rupees, right? So there 20% will be 10,000 rupees or 1 lakh rupees, right? So the amount will, though it is a 2%, but even then amount will be huge. So that is the reason for a large food business, it is always advisable to calculate your food cost report or prepare your food cost report on a daily basis so that you can track that where you are going wrong on a daily basis and you can take the immediate action. I believe that it is clear, right? So that is the reason, depending on the size of your food business, you decide whether you'll be preparing the food cost report daily, weekly, or monthly. But this is a most powerful tool which you should use in the restaurant. Okay, otherwise, in no time, you will find that you are incurring the tremendous loss. And this is one of the main reasons that the statistic says that 80% of our restaurant startup, they are closed during the first year because of this, because their process is not in place. So this is the food cost report is one of the most important tool. So don't forget to prepare the report depending on the size of your restaurant, whether it is a daily, weekly, or monthly. I hope this video is valuable for you. So if you like this video, give a thumbs up. And if you like me, subscribe my channel and press the bell icon, because I put lots of valuable videos in my channel. Thank you so much for watching.